Alrighty, guys. Let's see. I know I'm recording already, so let me start talking. Today is what? Today is January 13th, 2021. This is the second Wall Street Wednesday of the year. This is episode number 31. So we've done 31 Wall Street Wednesdays so far. So we've got some interesting stuff to talk about today. As usual, I'll give people a few minutes to join in. Today was an interesting day. And the reason why it was an interesting day was I spent part of the day, most of the day actually, watching the Senate hearings. I believe it was Senate hearings. But listening to the hearings this morning about impeachment. So just interesting always to hear that. So, but that's what was going on. And like I said, I sent some charts today, so we got a lot to talk about. I think some things that can put some money in your pocket. There is, spit up, Mike. There are several IPOs coming this week and on slate for the next couple of weeks. We're also rolling into earnings season, so there's going to be a chance to make some money based on earnings. And then as always, and I've talked about this briefly a few times, and I'll talk about this near the end of the session because it's something new. I shouldn't say new, but I've talked about it. And one of the things I've always told you guys is, for me, one of the biggest money makers for me was secondary public offerings, SPOs. They've changed how they bring SPOs to the marketplace a little bit. So, but, there's some opportunity to be made in that. And so I'm going to talk about that. There's a big, it's not a large, but there's a hot IPO company that went public. Let's see, I'm trying to look, I actually can see it, but went public a couple of months ago. They're doing a secondary offering. The stock is hot and the offering has become very interesting. So I'm going to talk about that too. And again, those are SPOs, secondary public offerings. You'll also hear them called seasoned public offerings. It really has to do a lot with whether they're issuing more of the new issue stock they issued several months ago, or if they're actually issuing some, adding to the number of shares outstanding and adding more stock that was already never issued to the public at all, and then they're bringing that. So that's a secondary public offering. Based on the company that we're talking about, you're looking at a seasoned public offering. What's going on is, and I'll talk about it. I'm not going to talk about it now. So I'm just waiting for a few more people, and if not, we're going to get started. All right, so I waited for a few more people. I know I got a couple of emails from some people that, they're trading, and when the market closes at 1 o'clock our time, 4 o'clock Eastern time, that a lot of these individuals have to wrap things up and so forth. So give them time to wrap it up. So again, welcome everybody. Welcome Twin, welcome Christian. I haven't been saying names. Andrew, who else do I see? Boo, welcome Boo. Mikey Reed, what's going on? So hello to all you guys. All right, let's get to talking. Something just came across my screen, so I want to bring it up real quick. Content Logic. Now, Content Logic went public 2 or 3 weeks ago. When it went public, the IPO was priced at $24 a share. It opened up below $24, ran. Within 2 or 3 days, I think it actually went to $24.15, a little above $24, and then from there it cracked and went down all the way down to, I believe it was $17 a share. I'm pulling up the stock chart now as I speak. That's the reason why a little hesitation. And again, I don't know what's going on, but Whoosh, over the last 2 days, Whoosh came off of a low of about just under $20, and today it traded as high as $24.50. So first and foremost, when I put out a short recommendation on IPOs, again, I'm not saying the company's going out of business. What I'm saying is that the stock is ahead of itself and the stock is coming in. Now, don't get me wrong. There have been some businesses that have done IPOs that I felt the company was a piece of crap and it wasn't going to be around long. So in Wish's case, which is Content Logic, it more or less is just a mispricing. Wall Street priced it at the investment bankers priced it at $24 a share, and Wall Street at the time didn't think it was worth that much. So that's what you're looking at. All right. If you were short, hopefully, if you were able to get short, hopefully you covered and you picked yourself up, 6, 7, 8 points on the short side. All right, so that's that. Moving on. So let me address a couple other things. And let me go to my charts. Bear with me a second. Let's see, I believe, let's do, I think this is the one. All right, so as you guys know, a couple of weeks ago, Airbnb and DoorDash both went public. And Airbnb today took out its old high. Now, it took out its old high. The old high was about 175. So let me back up. The first day intraday, first day high was about 166, 167, 166, around there. A couple of days later, it broke that. It came in. So it came in, it broke that, fought back and forth. In the last 2 days, the stock has gone from 148 as high as about 177. So we've had a big run in Airbnb. I did not trade this IPO. And I'm going to say something. Some of these IPOs I don't trade. Airbnb, I didn't trade it because I'm not sure how much is in it. So what do I mean by that? What I mean by that is it could be a nice trade, but it seems like, in just looking at it, it doesn't seem like there's much momentum behind it. And I'm not a big fan, understand what I'm about to say, I'm not a big fan of this stock in terms of a trading stock. All right, so that's where I feel. Can the stock go up to 200? Sure it can. It ran over the last 2 days. Volume was somewhat a little heavier than normal, but again, I'm just not feeling it. I guess that's the best way to put it. The other one that I have on here, let's see if I can find it, is make sure I'm getting the right stock. Bear with me a second. See if this is the right stock. No, it's not the one I'm looking for. That was Airbnb. And you're looking at DoorDash. Now, DoorDash also took out its old high yesterday. The old high was 195, which you hit the first day of trading. Again, now I don't bottom fish. So the first day trading stock hit 195. It's pulled back all the way to basically almost 135 on the low side. And then from 140, so the last 5 days, the stock has rallied from 140 all the way up to 215. So again, I did not trade it. This one has more power behind it through the move through the 195, which was the old high. So again, it took out the old high yesterday. Today, it took out that old high again and pushed all the way up to 215. Now, it did pull back into this trading range, our short-term trading range right above the old high, 195, and closed. It looks like it closed at about 199. So I would stay with Dash. You have some nice volume behind it. I would stay with Dash. And again, like all IPOs that we trade when they get to the new market, I would put a stop loss on this. I did not trade this one again, but again, I like Dash better than Airbnb. And again, I like both companies on the longer term. And I'm a little bit nervous about Dash. So I'm a little bit nervous about Dash. And the reason why I'm a little bit nervous about DoorDash is it's not, as I said before, there's no barrier of entry to this business. Anyone can basically do it. The question is, can you do it and be profitable? In certain cases, with this valuation, DoorDash actually is worth more than the companies that are delivering food from. DoorDash has a high valuation in Chipotle and some other stocks. I got to take a look. But it really, really has a high valuation. Now, normally I don't look at valuation in this respect on these. But again, I don't think DoorDash is the kind of stock that's going to give us a 30-point, 40-point run every day. I think that this is just jockeying. But again, that's my belief. All right. Now, with that said, a couple of things I want to go over real quick before I get into Lemonade. So let me switch out of this, switch back to me. You guys can see me. Oh, you don't need to see that. You can see me. Bear with me a second. There it is. All right, cool. Sorry about that. Trying to just work this thing. All right. So what I was going to say was this. Today we had come public, AFRM, symbol AFRM. AFRM. I'm not sure where it closed at. Stock was priced at the price range was increased to $41 to $44. All right. Bear with me a second. I'm just putting up the chart, see where it closed at. So AFRM was price range was $41 to $44 a share. The stock opened up at $49, and intraday went as high as 103, as low as just below 91, and a close of, it looks like, a hair above 97. So keep an eye on this. I've already said to keep an eye on this. One of the things that I like about AFRM is, I like who brought them public. I like a lot of things, but one of the things that's interesting is AFRM is actually a lender. They loan money, but they're going after a segment of the market that is underserved. So they're going after people with bad credit, low credit, slow credit. I know that these loans carry more risk, but these loans are being made. There's a need out there. There's a demand for it. I think the company will be fine long term. I imagine it will draw some competition. I think there's a good chance to trade this. So again, keep your eye on it. Again, they raised the range from, I believe it was 37.39 to 41.44, and then they priced the deal at 49. That tells you it's hot IPO. Now, with that said, again, be patient. Be patient. The other one that came public today that normally I would not trade this. I'm just putting up the chart. Bear with me a second. Normally I wouldn't trade this one. The company is Motorsport Gaming, symbol MSGM. Motorsport Gaming, MSGM. The reason why I would not trade it, small deal, not a very powerful underwriter, but what they do is they actually make the video games for NASCAR. So they make the video games. They're basically a video game company. They have NASCAR, a couple other racing games. I went and looked at the financials. The revenue basically has doubled over the last 12 months. So normally I wouldn't look at this. Small deal, small investment banker, second tier, third tier, but it's caught my attention. I think that there's a chance here. So again, I'll watch it. I'll watch it trade. A little smaller company. All right. Now, with that said, let me talk about this real quick. Again, I know I'm being redundant, but I got to be redundant. Just again, when a company that's already public decides to come to the marketplace and issue more common stock, this is known as a secondary public offering. All right. It's one of the ways that corporations can raise capital. When they need to raise capital, they can raise capital in the debt market, which is bonds. They can raise capital in the equity market, either through common stock or preferred stock. Now, when a company decides that they're doing a secondary public offering, they're issuing more of the company's stock to the public. When they do a secondary public offering, well, let me go back. The other one is a seasoned public offering. The two can become very confusing. Now, a seasoned public offering is they're offering more stock to the public, but this is IPO stock that they did not issue when the company went public. Let me say it again. A seasoned public offering is when they're going to issue more of the IPO stock at the current market price, all right, that was not issued when the company went public. Very confusing, I know, and that it also will trade because it is a secondary public offering. The difference is we use the word season to talk about where the stock is coming from. All right, so with that said, when an investment banker, let me back up again, I apologize. A company can do a secondary public offering two ways. One is a shelf offering. Again, I apologize for sounding like I'm lecturing. I'm not trying to lecture you guys. I just make sure that you need to have this information before we can go forward. As I always tell you guys, the key to winning the game is knowing the rules of the game. Right now, I got to give you the rules. On a shelf public offering, the investment bank will register all the paperwork with the SEC. Then they have up to 2 years to bring this security to the public. So in essence, the reason why they call it shelf is the paperwork is sitting on the shelf waiting for them to bring it. Now in the shelf public offering, the investment bankers and corporation are literally going to take the stock, and when they decide to do it, they're just going to drop it on the market. So what do I mean by drop it on the market? Literally, if they're doing a shelf offering tonight, let's say for IBM, they're going to take this IBM stock that they're going to offer to the public. They're going to call up institutional investors and ask them how much they want. They're going to give them stock, and then tomorrow morning when the stock opens, the stock was basically just dropped on the marketplace. The reason why I bring this up is in most shelf offerings, the stock is going to come in off the offering because the investment bankers aren't going to support it. It's not in their contract. It's a shelf offering. They drop it, they let it go, and the market will take care of the rest. Now, when you see a shelf offering, in a lot of cases, they're doing quality companies. The stock will come in when they drop it. But quality companies, a lot of times they'll come in for a couple of percentage points, 1 or 2 maybe at the most, but they're not going to fall apart. And on the shelf offering, when the stock does go back through that offering price, you can expect it to run a little bit. Now, the other type of offering, which is the one that I'm focused on today, is they will file, the investment bankers will file the paperwork with the SEC that they're doing a secondary offering. Because they're filing paperwork with the SEC and it's not a shelf offering, this can take 2 to 3, 4 days, even longer, to bring the stock to the public. Now, when they announce this secondary offering, and they announce that they're going to do it, you're going to see the investment bankers start to short the stock. Let me say it again. The investment bankers themselves are going to look to short the stock. They're going to bring the price in. And the reason why they're going to short the stock and bring the price in is because once they price the deal, it's their responsibility to hold the deal up. They become support. So the reason why they're short is that when investors start selling that stock, when the deal's priced, they're going to buy that stock to hold the stock at bid. Now, with this known, and with me knowing this and how they work, let me continue this. Once the deal is done, depending on how strong the deal is, and understand some of these deals, these secondaries can be really hot. Once again, when this stock starts to run up through wherever it was priced at, you can expect the run to continue. Understand, you cannot do a secondary offering, or you shouldn't say can't. Other things happen. You don't want to do a secondary offering on a stock that's going down. If you take the time and look, you'll notice that the companies that do offerings in general, and the ones that we're interested in, they have great charts. They're doing extremely well. So with all that said, I'm going to go to Lemonade. This is a weekly chart of Lemonade. And the reason why I brought the weekly chart of Lemonade is, again, I've talked about Lemonade a few times. Lemonade, they're an insurance company, all right? They, not an insurance company, but they actually do insurance. They market insurance, they do insurance. They're an insurance company that you can actually get quotes from. I'm not going to go into that right now. You can see that, and the reason why I drew the line is within the first week or 2 weeks of trading, the stock, it got as high as $80. That's where I put my number. And I said, look, if the stock goes through 80, I'd be a buyer. As you can see, the stock went through 80. When the stock went through 80, it ran, and it has continued to run. Bear with me a second. I'm just pulling up the chart. And it's continued to run. It's had some points of backing filling. But here's what gets interesting. I believe, there it is. Here's what gets interesting. Since the last 5-6 days, the stock has run from basically a low of 122 to a high of 190. Now, when they announced the secondary, when they announced that they were doing this secondary, the stock was trading at 183, 187. The stock ran a little bit from there. Anyone who knows me, and I talked to my partners about this, the first thing I said was, short Lemonade. Not because it's a good company, not because it's a bad company, because I know the investment bank is going to bring this in. And when they talked about it, they said at 183 when they announced it, the other comment I made was, I'm looking for pricing probably about 170 in that range. So, quickly, here's what I do. Short the stock. Short the stock, looking for it to come down to 170. Now, I know one of my listeners is actually long the puts. So you can also buy puts because the stock is going to come in. I would not be surprised to see if the stock is priced at 170 to even actually see it open up below 170. I've seen that happen a number of times. If you're short and the stock opens up at 170 or below, it's time to cover your short. Cover your short. Because once the market digests this stock and the investment bankers hold it up, this stock is going to run back to its old high. Now, I know a number of you got involved with this because it got caught in the short squeeze. And the short squeeze is when when people short the stock, they're playing for the price to drop. When the price goes up, they start losing money. The only way to close out a short position is to buy the stock back. When they're forced to buy the stock back, that's when you see a short squeeze. So I've heard that there was a short squeeze. All I know is that over the last 4 or 5 days, the volume's been strong as the stock has rallied. So with all that said, the other thing I'm going to say to you is that, again, without me, I'm saying this now without seeing how the stock trades tomorrow when opening, but all I'm saying to you is that if Lemonade, again, priced at 170, opens up at 170 or below 170, on a move through 170, be a buyer. If it opens up at 170, you're a buyer. Again, be a buyer. Use a 10% stop loss. 10% on a $70 stock is $17, which takes you about to 153. 153 is not a bad place to be. All right. And again, that's what you're looking at. If it takes 2 or 3 days for them to digest the stock, it takes 2 or 3 days. For those who've been on the call with me, let me get out of this. For those who've been on the call with me before, know that we talked about this with DraftKings. All right, made a lot of money, made some good returns on DraftKings, shorting it ahead of the deal, buying it long after the deal when it ran through the numbers. So this is a strategy I've used, and I repeat, I've made more money trading secondary public offerings than I ever made from IPOs. All right, 2 reasons why. You can get the size, and you can play the stock to the short side right away. You can play it to the long side once it goes. So that's what I would do with Lemonade. That's what I'm looking for with Lemonade. I promise you that at some point, I know, I'm always saying this, at some point in the future, I will actually go into more detail in terms of the secondary public offerings, SPOs. The reason why I don't spend more time talking about SPOs is they are trickier. There's a lot more that goes into the research. And what I mean by a lot more going into the research is, once again, I only do this with stocks that I would want to own anyway. So in other words, if they want doing a secondary offering, would I look to buy this stock? Would I want to be involved in this company? And if the answer is yes, then that's when I look to do to trade the secondaries. If the answer is I have no interest in the company before the secondary offering, I'm not going to trade it after the secondary offering. All right. So those are the things I wanted to make sure I talked about. Those are the things I wanted to bring to your attention. Real quick, again, don't forget, we are rolling into earnings season. Do not forget that. We are rolling into earnings season. Just a quick warning, whatever stocks you own or stocks you're trading, make sure that you understand when they're due to report earnings. All right, when are they due to report earnings? Because earnings are going to have a direct impact. Some of these IPOs, you might not be able to find the date yet, but keep looking. Eventually, they will let you know when the date is. Now, the one thing, excellent, Hi. The one thing I'm going to address, Hi made a comment about Zoom, so I'm going to address that in a minute. So the one thing I want to say to you, though, is you're in earnings season. Knowing your company's going to report earnings. Earnings have a direct impact on the stock and the price of the stock. The other thing I'm going to tell you is that most investment bankers, when their company goes public, they already have an idea of what their earnings are going to be and where they're going to be at. Now, I talked about Zoom. Zoom did a secondary. No, excuse me. Zoom announced. I got to go back. Bear with me 1 second. Bear with me 1 second because I can. Why did that not open for me? All right, there it is. All right, so let me talk about this real quick. I'm not sure if Zoom did the secondary yet. I just pulled it up. I know they announced it. Bear with me a second. I'm looking for it now. I know they announced it. Hi, do me a favor. Did Zoom price the secondary already, or did the secondary come? All right, I'm waiting on Hi, but let me just say something to you real quick. If I remember correctly, Zoom was not a secondary that was put on the books. Zoom was oh God, I stuttered on that one. Zoom was a shelf offering. So Zoom was not one where the investment bankers had time. Now, here's what's interesting on Zoom. Zoom stock hit a near-term high back in October of a little over $580 a share. And right now, Zoom yesterday hit as low as a low of $340. So first and foremost, I'm not interested in trading Zoom secondary stock because I'm not interested in buying Zoom stock right now. The stock has a lot of work in front of it. It's been choppy. It's in a downward trend near term. It basically is filling that gap that they had back in September. There was a gap on earnings when the stock closed at 3, looked like a little above 320, opened up the next day at 440. It's coming back and filling that gap. And anybody that's into technical analysis knows that that a lot of these stocks will come back and fill the gap. The secondary was priced. Thank you. The secondary was priced at 340. So they dropped it on Wall Street's head. The secondary was priced at 340. You can see that the stock was as low as, let me get my numbers here. Come on, as low as 331, and now it's trying to rally back. It rallied back to 380, then it pulled back, and the reason being there's a trading range between 420 and 380. So I would not be, again, I didn't play it, wouldn't touch it. They dropped it on, like I said, they dropped it on Wall Street's head. Now, they did price it in the hole, and that's what you'll typically see. When you hear me say price it in the hole, if the stock closed at, and I don't know where it closed at that particular day, but let's say the stock closed at 360 and they priced it at 340. If the stock closed at 360 and they priced it at 340, that means they priced it in the hole. And one of the reasons why they price them in the hole is they're trying to make it attractive to investors to buy and giving investors a discount, because why would I buy stock at 360 when I can go in the marketplace and buy it at 360? So in order to make it attractive, they discount it, and that's what I mean by price it in the hole. In some cases, I know I'm doing a lot on SPOs. In some cases, if the stock comes in enough, and what I mean by come in, if the price drops enough, they won't price in the hole because they brought the stock price down to the hole. All right? This is the secondary public offering. This is what's going on. This is how it works. And this is what I track. So hopefully you guys got something out of that. Now, let me just move on real quick. I got to say it. We are looking at a hot IPO market. I think the IPO market's going to take off. We've got a number of deals coming this week that we're going to look to trade over the next couple of weeks. Bear with me a second. I'm going to give you some names that are coming. So we got Poshmark. Poshmark's looking hot. Right now, the range is about $35 to $39. It's looking hot. So the deal is, what do we do after it? Part of Poshmark was also because of Wish, Content Logic. We also have Petco coming this week. We have Petco coming this week. And then the one that also seems very interesting is, I know I'm probably pronouncing it wrong. All right, hi, I'll catch up to you later. I know I'm pronouncing it wrong. Playtika, I guess that's the name of it. The spelling is Playtika. Playtika. They make games. They make the mobile games. So if you've been on your phone and you've been playing chess or some of these mobile games, they make the mobile games. The deal's been increased in size. They raised the offering price. It's a hot deal. So I think we make some money with those. So again, but again, I'm not getting deal stocks. So I'm gonna have to trade these in the aftermarket. And then again, just real quick, Lemonade was put on at 183, 4.5 million shares. So that's what we're looking at. And that's probably being priced tonight for tomorrow. So those are some trades that I can give you guys, I can mention to you guys. I think that you'll do well with those. Again, with Lemonade, volatile stock moving, but I think you can make some money on it. All right, now, a couple of housekeeping notes. My partners and I are diligently working to get everything put in place for Professor Milligan's ideas, which means that what are we trading, when are we trading, what we're doing. So right now, a couple things are going on, and that is I'm waiting for my attorney to go through the paperwork. I'm also in the process, my IT guy is finishing up the website and so forth, the landing page. So it's more just technical stuff. We're chomping at the bit, like I said. Chomping at the bit, I think there's a lot of money to be made, and not just for you guys, but for me. So we can put some money in our pocket. So Ham's asking me, if you like Poshmark, there is another coming called Trend Up. Same business, but I think Trend Up can trade at a premium to Poshmark due to more middleman services. Okay. So what I'm saying to Ham is, I'm not saying he's right or wrong. I'm just saying, okay. One of the things when I'm trading IPOs, and Ham, thank you for that, is I typically don't compare which IPO is going to be better than the last IPO. I really do look at them independently. I don't try and, I'm not trying to figure out which one's going to trade higher or trade lower. I just don't. I basically watch them. I look for certain key things. I take my position and I let the stock talk to me. I mean, I let it run. I'm long Upstart. I think I mentioned, I think it's, I'm almost positive. Just numbers stuck in my head. I own Upstart at $48 and change, around 49. Stock ran to $69 a share, and then today it closed at, it looks like about, I'll give you the give me a number, and it closed there at $58 a share. So for me now, decision time, and I'm not sure. Well, decision time. One is the stock ran to 69 off of volume, but in it closing below yesterday's high. So I'm not sure. Is this the start of a near-term pullback, or is there anything left in it? So I'm smiling because I literally went to sell the stock and take my profit today, and I got busy with a phone call and some other stuff. When I looked up, believe it or not, the market was closed and I couldn't get the order in. So I literally was looking to bank in, a $10, $15 over 2 days, 3 days. I'm not going to argue with that. Take the money and run. So I mentioned that to say to you, right now, it looks like the follow through is weak. So I did not get it out today. I'll have to wait tomorrow to see how it opens and, the opening tomorrow, and then I'll make my decision. But I did go to sell it today. I was going to close out my stop and sell it today and take my profit and move on. All right. So that's that. Now, what else was I saying? Oh yeah. So my partners and I were chomping at the bit. We're ready to roll. So one of the things that we're going to do is in our services, we're going to have a service where we literally will text out exactly what stocks we're trading, what we're buying, what we're short, when we close out our position. I'm literally going to text you exactly what I'm doing. I text you ideas. In a lot of cases, if I'm not, like it was a couple of weeks ago, I can't remember what stock it was, but there was a deal that came. I liked it, but I did not trade it. It was HYFM, marijuana stock out of Canada. I liked the way it was trading. When it broke out at 60, wanted to buy it. I did not buy it when it broke out through 60. It ran to $77, 17-point move in 2 or 3 days. But I kept my powder dry because I went in another direction. I wanted to go someplace else. So I'll share ideas. My partners and I will share ideas like that we're looking at, that we're doing. I might not be in the position, but my partners might be trading that stock. So my partners also trade these, they're using my strategy. We're doing the same thing. We're all trading. So we'll share. I will look to expand this to the secondary public offering, just that the secondaries take more work to put together and find the trade. It's just more time consuming. And IPOs are time consuming enough. The other thing that we're going to do too is, hey Brian, the other thing that we're going to do too is we'll have a consulting service where you can actually, for those who need help, not sure what to do, where to go, want to speak to me or one of my partners privately to say, hey, I need some help, I'm not sure. Of course, bottom line is we all can make money doing this. There's money to be made. So we're putting that together. Again, because of I'm dealing in the financial markets, and some of you know this, the legalese. So the attorney's going through the paperwork and so forth, the disclaimer, and my IT guy. So hopefully I'll have everything up and running by the end of next week. Diligently working, staying up late, as well as trading this. Oh, and by the way, there's another IPO coup coming. Not sure what this one does. Driven Brands Holding. Only reason why I'm taking a look at it, the deal seems like it's going to be traded at a premium right away, and Morgan Stanley's the lead, so I'll look into it in more detail. But that's what's going on. All right, let me see. Any other questions? I covered everything I wanted to cover today. Again, just so you guys know, you can always, here's some good news. You can always follow me on Instagram. You can also follow me on YouTube. So I'll take a copy of this video today and I'll post it on YouTube. I will take a look at that, Ham. I've been following it. What was I saying? So I also have literally just set up an account on, make sure I get this right now, Clubhouse. And my partners and I will be going on Clubhouse. We have to set what date we're going to go on and when. What day, but we're going to go on Clubhouse and we're going to talk about investing, about IPOs, secondary public offerings. And I'm going to bring my partners on there too. So some nice discussion. And the other one too is, so those are the things that we're doing. All right. FVRR. So this stock was given to me by Ham, who's on the call right now. He's looking to trade the stock ahead of earnings. I'm not sure when the earnings date is. I know that, so let me back up. I'm not sure when they're due to report earnings. The last time they reported earnings was October 28th. So basically end of October, so November, December. So end of January sometime, we're probably looking at earnings. The stock has a history of beating or running up ahead earnings. The one thing I'll say though, Ham, is I'm looking at the chart right now. You had a nice move. The stock's been on a run from basically just below 200 for the last, 6-7 days. So last 7 days, the stock has been on a run from just below 200 to a move of, 260. Now, for those who are into technical analysis, what you're looking at right now is today we have what we call a spinning top. I'm not trying to get into technical analysis. I'm just telling you what they call this, a spinning top. Spinning tops typically mean that you can look for a reversal, it's running out of gas. So, and if you look at the stock, most times they have spinning tops, there is a reversal. So what that means, what I mean by reversal is I would look for the stock based on what I'm looking at the charts to pull back. Now, a move, the old high was 230. A move from 230, which is where it broke out, the top of the old trading range to 260, a 30-point move, to have a 15-point pullback, not surprised. So to see the stock go from 260 down to the 240 range, I would not be surprised at all. All right, that would just be natural. You'd want to see it when it pulls back in that 240 range, 245 range to see it hold up. Not trade back into the old trading range. Now, again, based upon earnings, and I don't know enough about the company and what they do, so I'm just reading the chart. I'm just looking at what they've done in the past. But again, I would expect, and if it does pull back, it's not a negative. It would be healthy. All right. You don't want to see stocks just go parabolic and just go straight up, because what it means is there's going to be a pullback, and that pullback can be very volatile because of the run up. So stocks an upward trend, like it. Ham, I would say to you, based upon how much profit you have going into the earnings would determine whether or not you close out your position. So what I do, if I'm in the stock and I'm still in it ahead of earnings and the stock has continued to run up, I literally might sell half the position just to lock in the profit, or I might buy some puts on it to lock in profit. The one thing that we've seen over the last 2 quarters is that when companies beat on earnings, even when they beat on earnings, there hasn't been much follow through that day. And even when they beat and when they miss on earnings, there's just been no follow through. So that's the thing I worry about. You have companies that are beating on earnings, the stock will run up ahead of earnings, and then no follow through after the numbers announced. They do follow through eventually 2-3 weeks later, but they're not following through right away, which is what we've seen in the past. So hopefully I helped you with that, but that's what I would do. Thank you. All right. Let's see. I did that. Oh, real quick. GameStop, GME. The stock I love to hate. Now, what's interesting with GameStop, I'm not sure if Christian's still on here. GameStop, I don't have a chart, but you guys can take a look at GameStop. GameStop has been the stock that, I don't know, for the last 6 or 7 years, my students at Fullerton have just been beating the piss out of this stock, just beating it down. And the reason being is it's one of our favorite short recommendations. Now, Christian, and by the way, just so you guys know, when I say Christian was one of my former students also, much smarter than I am now. But Christian got involved with GameStop. He saw that there was a huge short position in the stock. And again, make sure you understand what I mean by that. If you're short a stock, you're playing for the price to go down. All right, that's how you make your money. If you're short a stock, and you only can short stock in the margin account, and if you're short a stock and it starts to go up, you lose money. The only way to close out your short position is to buy the stock back. So in GameStop's case, the stock started to move back up. They've got some, I believe if I remember correctly, they got activists involved now. They've got some private equity guys. They got some things going on where they're trying to turn this thing around. So the stock has started to trade higher. As the stock starts to move up, for those of you who never experienced this, your phone will ring. Your account will get an alert. Mr. Milligan, yes. You have a margin call on GameStop. I have a margin call. Yes, the stock has gone higher. You have a couple options, Mr. Milligan. One, hope the stock goes back down in price so the margin call will go away. I hate to hope. I'm not a hoper. I'm an investor. I want to make money. I'm not a hoper. So we want to get rid of that. The next question then becomes, or the next thing is, okay, the other thing, Mr. Milligan, you do is send in more money. So I got an investment that's going against me. I'm losing money, and you want me to send in more money to add to that position? Answer is no. And by the way, for those of you, if you get a margin call, close out your position. You were wrong. The trade's going against you. Don't sit back and hope it goes your favor. Don't add more money to it. Don't do any of that. Close out your position. The third option, or you could do this, the third option is if your position's big enough, close out part of your position. Just enough to get rid of the margin call if you want to stay with it. I recommend if you get a margin call, get out. So now knowing this, as GameStop started to go up, investors started getting that margin call. And eventually as they got that margin call, they were forced to step back in and start buying the stock. And as they were buying the stock, they end up what they call a short squeeze, pushing it back up. And as they push it back up, the natural buying is still there. And then you have these people covering their short, which is called a short squeeze, and it runs. Now, the reason why I bring this up is the stock on the short squeeze, you can see it went parabolic. It went from $20 a share to $39 a share. If you are one of these people that was long the stock, understand the short squeeze is not going to hold this stock up forever. So in other words, look for the pullback. It's going to pull back because eventually the shorts that are being squeezed are going to stop paying for it. They're going to let it go. They cover their position. They're going to leave it alone. The natural buying's there, but all this other buying is going to make it go down, and it's going to eventually come back. Christian said it's the mother of all squeezes today. If you're in it, take profits. Now, for those of you who've been trading Tesla for the last 5-6 years, you've seen short squeezes. It happens on a regular basis. Diana, how's things going in Paris or France? Hopefully everything's well there. Welcome back, or at least welcome on the call. All right, that was GameStop. I'm just looking at one other thing. I did have Carlson. I believe I'm pronouncing this wrong. Let me make sure I'm pronouncing it right. Carlson. Carlson's asked me to come on my video live. Carlson, I need to know a little bit more. I just don't let people come on live that I'm not sure what you want to talk about. I have to be careful. And the reason why I have to be careful is, and don't take this personally, I was actually reading a Facebook conversation with an individual that was long some options. And on Facebook, she was long some options. I'm laughing because it is funny. And she said, I have no idea what to do. And the advice that was coming through, one person typed in, well, you can't close out your option position till expiration date. Wrong. Another person said that you have to call in the stock. You have to take the stock. Wrong. Then she followed that up with a statement of, I'm not sure what I'm doing, but I'm making money. Should I do it again? And finally, somebody jumped on and said to her, no, if you don't know what you're doing, just stop. Just stop. My daughter actually texted her a whole little information on actually what a call option is and how they work. So I say all that to say, it's one of the reasons why I just won't let anybody come on without me knowing more about it. So Carlson, if you want to come on next week, hit me up, inbox me, DM me, tell me what's going on, what you want to talk about, what you want to do, and I have no problem, letting you come on. But I need to know. Now I'm getting another question on plug power, symbols PLUG. I did look at plug earlier. I'm putting the chart in again real quick. Again, I don't know, but here's the deal. Bear with me. Bear with me 1 second. I just want to go back a little bit on the chart. I want to see how far back this goes. All right. So here's the deal on plug. I don't know why, plug does solar panels. I believe it is solar. Plug did run. Plug went from basically 36 and it ran as high as from 36. It ran up to $75, $76 a share. So you had a run. 1, 2, 3, 4, 5. Over the last 7 days. Last 7 days, this stock has done nothing but run. Now you got gaps in here. You got 2 big gaps. So not knowing, thank you, hydrogen, water, thank you. Not knowing exactly why the stock ran, a couple things I want to say to you. One is, expect a pullback, a consolidation. It would be healthy. If, unless the stock got a takeover offer, and even if the stock got a takeover offer, probably nothing wrong with taking a profit here. Bulls make money, bears make money, pigs get slaughtered. Probably not a bad idea taking profits here. There's some gaps in here. The only way this won't fill these gaps is if the news that came out was some acquisition or something that was so compelling, the stock will never turn around and look back. It looks more like this happened over a 5-day period with some gaps in here. I would expect a pullback, even if the pullback is only 50%. All right. Let's see what else. So that's plug. I'm just looking at the chart. Yeah, I would expect a pullback. If you're in it, take your money and go. This kind of move, again, unless there's something that, unless there's some news that comes on, that, again, I got to know more, but right now I would be taking profits. Again, it looks like a squeeze. You got some gaps in here. It must be on some news. Yeah, I would take my profits and move on, or at least take my profits and watch it. For those who don't want to take profits, understand what I'm going to have to say to you. Again, I'm just checking my time. For those of you who don't want to take profits, lock in your profit, buy it at the money put. Now, I don't know if Plug has puts available. I'm assuming it does based on the stock. It's been around for a minute. I would, again, buy some puts at the money. So I'd buy a put with a 60. Probably you might see a 67.5 strike on it, maybe even a 70 strike. But I would buy maybe just a little bit under the money. But I'd buy a 70 put or 68 put. It's going to cost you some money. It's probably a lot of premium in it. You can even buy a 65 put, which would probably cost you a little less money. But I would buy that to lock in my profits. And then for those who understand puts, understand as the stock goes down in price, the put should go up in value. And you're locking in your profit. All right. It's a strategy I use all the time when you're not sure what to do with a stock. All right. I had one on, was this Cloverfield? I believe that's the name. Clover Health Investment Corp. Not familiar with the company at all. Looking at the chart, I guess maybe I should be familiar with it. I don't know. Looks like they went public not too long ago. I'm switching this to a daily chart. So a company went public not too long ago. I don't have the price in front of me. Do you happen to know what the stock was priced at? What was the deal priced at? Caesar, do you happen to know what the deal's priced at? By the way, hello, Caesar. Do you happen to know what the deal was priced at? If not, I don't want to sit here and search for it, but let me look. So let me look at the chart. Without me knowing anything about the company or when they went public or what price and all that, the one thing I would say is I'm more comfortable being short. I would be more comfortable being short this stock than being long. So that's the first thing I'll say. So let me say it again. If I was trading this stock, I'd be much more comfortable being short than being long. Is that what it is? So somebody said they think it's a SPAC merger, a blank check. So again, I'm not sure. I'm not sure what's inside of here, but looking at the chart, I'm just going by pure chart then. I don't know what's inside. I'm not looking what's inside. Bear with me 1 second. I'm going to get rid of the volume on this. I need to get rid of volume. I just don't want to see the volumes in my way. Checking my time. Okay, yeah. So if this was I'm not sure if this SPOC, and no one's answering me, so I gotta go find out. I guess bear with me a second. I need to go to a chart. I just need to find out when this thing was priced. CLOV IPO price. So CLOV, company's first day of trading, stock was I don't know what it's priced at. Let's see. I want to know the price. It's not giving me the price. Bear with me a second. Come on, where's the price? No. All right, so I don't know what the price is. I'm looking for it. My time's running on me. Let me see. Let me look here again. San Francisco-based company. I believe it was priced at 16. No, close at 16. I can't find it. Oh, the merger value. Yeah, it was SPAC. It was a merger. All right. So it was SPAC. It was a merger. Stock looks like when they announced the deal, the stock was a little bit above 15, 16, ran to 17 and change, and now it's pulled back to 14. As I said, When I talk about these SPACs, the first thing I say is I'm not interested in SPAC until I see what's inside of it. And then looking inside of it, like we see with this Clover, which is the healthcare company, like I said, I would be more comfortable being short than being long this thing. Yeah, it's had several breakdowns. Looks like they tried to have some support right around there at 15, but it just couldn't hold. Yeah. All right. Yeah, there's a number of hot IPOs coming up. I hate to say it to you this way. I went over in the call. You know what? I'll do it one more time before, and I'm going to end on that. So let me do it one more time. I'm going to tell you what hot IPOs are here. So this week, hot IPOs, again, doesn't mean I'm going to trade them. Doesn't mean we're going to trade them. But these are hot IPOs. And what they mean by hot is they should go to a premium the first day of trading, substantial premium, but should go to a premium. Sometimes that premium can only be $1 or $2, but that's not bad. So hot deals for the rest of this week. You've got Poshmark. You've got Petco. Who else do you have? They're calling Driven somewhat hot. So you got that. So you still have those left. Poshmark, Petco, Driven, and then Playtika, Playtika Holdings. All those are hot deals. And again, I can already tell you that there's 2 or 3 of them that I'm looking at that will probably be trading in the next couple of days, couple of weeks. All right, I got to hop off now. I do appreciate you guys. Thank you so much for coming. I'll keep you abreast. Keep putting money in our pockets. Keep putting money in your pocket. Market is hot. Let's deal with these hot IPOs while they're here. Let's roll it up. Put the bags in our pocket while we can. So I will see you next week. And again, during the week, if you see anything that's going on, feel free to text me. And by the way, for some of you guys, again, real quick, I'm looking for testimonials. If you have a testimonial with Wall Street Wednesday, Professor Milligan, you found it helpful, enlightening, so forth, please send me a video. The video will be posted on my website, but again, if you can, send it. I got to hop because I want to keep this recording. My time is running out. Have a great day, guys.